Do you want to learn an anticipation and a price momentum like this one? You are right, because this is the video that will change how you see and trade the market. Today I'm showing you how banks and professional traders use volume spread analysis, one of the best leading strategies you can use for the trading. And if you wanted to show your support, please leave us a like to help us with YouTube algorithms, and turn on the bells so you don't miss when the new video are released. Volume spread analysis is the study of the price in the relations is corresponding volume. It basically identifies to the underlying reasons behind the market behavior or momentum. If the trades anticipates a bearish or the bullish momentum, then there must be then underlying reasons behind it. Volume spread analysis track down to the professional activity or the moves of the smart money. Smart money is the complex, is the big banks, hedge funds, and the large financial institutions, having the heavy pockets of the move to the market to the way they want. A volume spread analysis eliminates this subjectively for the trading, because while the price can be manipulated by the professional activity, volumes can't. Thereby, volumes spread analysis in the one of the best way to understand the market psychology and sentiments. VSA can be used in any market, like the Forex stocks indicates commission and the futures. Many people might agree that the Forex volumes are useless, as it's decentralized market having no real volumes. However, Forex has the volumes, which is proxy to real volumes and correlative in the 90% of the time. And yes, VSA methodology can also be applied to the any time frame. Wyckoff's VSA is one of the best methods to analyze the market, because it is non-subjective. It is not prone to smart money manipulations, as the method itself is used for detecting smart money activity. It figures out the underlying reasons behind the market movements, and also understand the case of imbalance between the supply and demand. First, let's see components of the volume spread analysis. First, spread is the difference between the opening and the closing of the price. Second, volume is the frequency of the trading of the price change during the specific period of the time. Third, bearish and the bullish volume. Bearish volume is the market in red, and it shows bearish activity. Bullish volume is the market in the green, and it shows bullish activity. Fourth, above average high volume. About average high volume is the highest volume in the current series, which is the higher than the average volume. Average volume is volume that considers with the moving average 20 of the volume indicator. Fifth, ultra high volume. Ultra high volume is the highest volume in the current sessions. It is higher than the previous peak volume. There are four stages of the VSA based on the Wyckoff theory. First, accumulation. This occurs when the supply and the demand are balanced to each other after a market down move. Second, markup. This occurs when the demand becomes more than the supply, causing an upward bullish, really often accumulations process. Third, distribution. This occurs when the supply and the demand are in the balance after an exhaust markup move. Fourth, markdown. This occurs when the supply becomes more than the demand, causes a downtrend drop after the distribution phase. Watch this video if you want to know more details about the Wyckoff method. There are two major applications of the VSA, namely tracking of the SOV, side of the weakness, and tracking. So, SOC, sign of the strength, SOV, signs of the weakness, occurs when the demand in exhaust buyers exhaust after the uptrend and the supply increase. More sellers come in. This imbalance between the supply and the demand causes the market to fall. SOS sign for the strange occurs when the supply X escalates, sellers escalates after the downtrends, and demand increase, more buyers come in. This imbalance between the supply and the demand causes the market to rise. Now let's talk about the different types of the signs of the strange. Down, those down turns in the bullish pin bar or the doji bar having the ultra high volume or above average high volume. The spread of the down turns bounce extremely low, meanwhile the volume is relatively high. VSA suggests that the spread is low, then the volume should also be low. In the case there is the divergence between the spread and the volume, which signifies that there is more demand than the supply, causing the price to rise in near future. 7 climax. 7 climax is the high spread bearish candles closing well off the lows. Having a noticeable downtrend, rejections week projected an ultra high or above the average high volume. High spread rejections, low volumes anticipated that the market will rise because there is more demand than supply. 7 climax has downtrends which those size approximately 25 to 50 of the candles body size. Bearish effort, bearish result. This is the high spread of the bearish candles whose spread is larger than the previous candles spread, but its volume is lower than the previous candles volume. VSA suggests that has been no effort made, then there should not be any results. This disagreement between the price and the volume increase the demand and reduce the supply, causing the market to rise in the future. And effort volume has not been made, but there is the result spread. Bearish effort, bearish results is this low spread bearish candles having the spread lower than the previous candles spread, but its volume is higher than the previous candles volume. In this case, there is the disagreement between the volume and the price, resulting demand to become more than the supply and causing the price to rise in the near future. An effort volume has been made, but there is no results. No supply bar. This is a low spread bearish candlestick hand downward, which those volume is the lower than the previous two candles volume. No supply bar means that there is a lack of the supply and demand is overpowered supply, causing the price to rise in the future. Please note that no supply bar is continuation signs, not reversal signs. No supply bar is effective only if it appears after the bullish momentum or it appears after the sign of the strange in the directions of the trend. Pure drawdown turns sell down turns the bullish bar, pin bar, or the doji bar having the low spread. Those volume is lower than the previous two candlesticks volume. This suggests that there is no supply or the lack of the supply. Lack of supply means that the demand will overpower the supply, causing price to rise in the near future. Please also note that the VSA down turns a continuation signal, not to a reversal signal. Pressure down turns the effective only if the appears after the bullish momentum to or appears after the sign of the strange in the directions of the trend. Inverse down turns in the inverse bullish pin bar or the doji bar having a low spreads and its volume is lower than the previous two candles volume. This suggests that there is no supply or lack of the supply. Lack of supply means that the demand will overpower the supply, causing prices or the rise in near future. Again, Clear inverts down those in configurations signs not a reversal signal, is effective only if it appears after the bullish momentum or appears after the sign of the trend. In the directions of the trend, inverse down those is the inverse bullish pin bar or the doji bar having the low spreads and the projected to the ultra high or above the average height volume. VSA suggests that the spread is low when the volume should also be low. In the case there is the disagreement between the spread and the volume, which is significant sign finds that there is more demand than the supply, causing the price to rise in near future. Failed effort 7 climax. Failed effort 7 climax is the variations of the 7 climax having a downward rejections, which has higher spread than the previous candles, and its volume is also higher than the previous candles. There is a disagreement between the volume price and compared to the previous candles. However, the next candles is bullish, observing the entire bearish effort. Now let's talk about the different type of the SOV side of weakness. Up throws is the bearish pin bar or the doji bar having the ultra high volume or above the average high volume. The spread of the up those bars is extremely low. Meanwhile, the volume is relatively high. VSA suggests that if the spread is low, then the volume should also be low. In this case, there is a disagreement between the spread and the volume, which signifies that there is more supply than the demand, causing price fall in the near future. Buying climax. Buying climax is the highest spread bullish candles, closing well off to the highest, having noticeable upwards rejection, which project an ultra high or above average high volume. High spread rejections, low volume anticipates that the market will decrease soon because there is more supply than demand. Buying climax has the upward wicks, represents 25 to 50 of the candle's body size. Bullish effort, bullish results is a high spread bullish candle whose spread is larger than the previous candle's spreads, but its volume is lower than the previous candle's volume. VSA suggests that if there has been no effort made to then there should not be the result spread. This divergence between the price and the volume increase supply and reduce demands, causing the market to the decrease in the value. Bullish effort or the bullish result. This is a low spread bullish candles having to the spread lower than the previous candles spread, but its volume is the higher than the previous candle's volume. VSA suggests that the effort has been made, then here must be resolved. In this case, there is the disagreement between the volume and the price, resulting supply to become more than the demand and causing price to fall in near future. No demand bar. This is the low spread bullish candles having upward switch whose volume is the lower than the previous two candlesticks. No demand bar means that there is lack of the demand of supply in overpricing demand, causing price fall future. Please note, no demand is the continuation signals, not a reversal signals. No demand is effective only if it appears after the bearish momentum or it appears after SOV side of weaknesses in the directions of the trend. Pedro approach is the bearish pin bar or the doji bar having the low spread whose volume is the lower than the previous two candlesticks volume. This suggests that there is no demand or lack of the demand. Lack of the demand means that the supply will overpower the demand, causing prices to fall into near future. Also, Pedro up those in the continuation signals and not reversal signals. So is effective only if it appears after the bearish momentum or it appears after SOV side of the weaknesses in the directions of the trend. Inverse Pedro up those is the inverse bearish pin bar having low spreads. This volume is lower than the previous two candles volumes. This suggests that there is no demand or lack of the demand. Pietro's inverse up-dose is also the continuation signals and not reversal signals. Pietro inverts up those effects only in the appearance after the bearish momentum. Inverse up those, there's inverse up those bar having the ultra high volume or above the high volume. The spread of those bars is extremely low, meanwhile the volume is really high. VSA suggests that if the spread is low, then the volume should be also low. In this case, there is the disagreement between the spread and the volume, which is significant that the more supply, the more demand causing the price fall in the future. Favored by the climax, failed effort buying into the climax is the variation of the buying climax having the upward projections, which has the higher spread in the previous candles, and its volume is also higher than the previous candles. There is a divergence between the price and the spread of the buying climax as they compare to the previous candles. However, the next candles is bearish absorbing to the entire bearish effort. I hope you realize that the volume spread analysis is a very powerful technique which unfolds to the some sentiments or other follows the market. If you enjoyed this video, connect and want to the Wyckoff Volume Spread Analysis video, we will select show your support to have us with YouTube algorithms, and in future videos we will even deeper with the more advanced strategies to be applied in the day trading and side trades. Until next time.